Welcome everyone to the first of our Outlook webinars for 2024 on the outlook for our markets. Today it's going to be focused on the frontier markets. It's me, Peter Elam Håkansson in Stockholm, and it's Emre Akcakmak in Dubai. So, smaller emerging markets and frontier markets had really a stellar year in 2023. It was something that quite a few people missed, but not East Capital and not Emre. With our Global Frontier Market Fund had a really nice performance, and we are here to talk more about this and what's going to happen then in 2024. But some of the markets that really turned out well was things like Romania, Poland, Hungary, Sri Lanka, Greece, etc. How did you view the year, Emre? Can you enlighten us a bit more on the things that happened?
Thank you, Peter. These markets that you counted, some of these markets, if you would ask to investors in the beginning of the year, they would probably list them as on their markets to avoid list, because some of these markets are among the most misunderstood, misperceived markets actually. But 2023, let's first establish a fact. Perceptions are something, but you have the facts on the ground. For emerging markets were underperforming. Developed markets are up by 20-23%, depending on the market. US has been very strong, but emerging markets are up by only 10%. First of all, 10% isn't too bad, but more importantly, this 10% was driven by China's poor performance. When you look at emerging markets ex-China, which is, we are talking about more than 20 emerging markets, they had their best year since 2017. They went up by 20% last year. So it was mostly about China, but other markets, when you think about them, you counted Poland and Greece among the emerging markets. Then you have the likes of Brazil, South Korea, and Taiwan. They were really enjoying a good year. And this is really not very well understood. And what is also not very well understood is that frontier markets and smaller emerging markets, they had one of their best years as well, with some of the recovery stories playing out in places like Pakistan, Egypt, even Nigeria started its economic rebalancing. Middle East has been doing well. So it was a year which might have come as a surprise to some, but I don't think this performance dynamics are very well understood because everything has been under the shadow of China.
Thank you. And when we look at the markets, how should we view this going forward a bit more? Why should you be in these markets?
These markets are all individual markets driven by individual dynamics. So if you take them a bit as a basket case, you are talking about fast-growing economies, and this is mostly about structural growth. Emerging markets are growing, that's good to see, and they are overshadowed by China's unfortunate poor performance. But when you look at frontier and smaller emerging markets, we are talking about 5 to 7% growth. In a place like Vietnam, we are not discussing if the economy will grow by 5 or 4%. We are thinking if it's going to grow by 5 to 7% in a given year. The Philippines is growing fast. You have some other up and coming economies. I think this is something that some of the viewers may be familiar with. This is the core of our investment case. You have fast growth, structural growth in frontier and smaller emerging markets. Second reason why one should consider investing in frontier markets. This is also something we have been talking about, and this is something we will underline every time, that frontier markets are, due to low correlations, ending up with lower correlations and lower volatility. So you have yet another year in 2023 that frontier markets, having delivered good results, they have been also showing less volatility compared to both emerging and developed markets. And as we usually talk about it, low correlations are the main reason behind that. In developed markets, which are primarily Europe and the US, you have very high correlations for understandable reasons. Emerging markets are also highly correlated. But frontier markets, they have nothing to do with each other, so correlations are very low and even negative in some cases. And another point which we typically bring up lately is that valuations are at historically attractive levels. Valuations, derating and re-rating, we don't know how it works, but the first 2 points, fast economic growth and low correlations, I think these are good enough reasons to consider frontier markets in this kind of a positive environment.
Yeah, it looks pretty good. But what about 2024 then? What should we be looking for?
Well, we usually talk about the Fed policies, rate hikes, rate cuts, but I think the story started already in the second half of 2023. Yes, it doesn't sound like a good year, but again, the reality on the ground is completely different. We had Fed policies becoming more clear as we approach 5% levels, plus minus, I'm saying. There might be one more rate hike, one more cut, earlier cuts, later cuts. But if you just take a step back and think about the outlook, we are now talking about the Fed coming to an end of its hiking cycle. Everybody knows that. And we are talking about likely cuts going forward and an election year. So in this kind of an environment and thinking about the recent dynamics, we expect the currency pressures to ease and economic growth to be supported in frontier and small emerging markets, and also along with declining inflation and central bank rate cuts. So I think we have a decent year ahead of us when it comes to these markets, which are seeing a bit of relief nowadays.
You talked a bit about currencies and inflation, but maybe you could expand a bit on that side, because it is something that I guess everyone is asking about all the time.
Yeah, again, it's perceptions and reality on the ground. I really want to make this distinction because unfortunately, frontier markets make the headlines on newspapers, particularly with negative news at times, but the reality on the ground is different. In majority of our frontier markets, we are having an inflation that's below 5%. Yes, inflation was up. Inflation has been peaking in many of these markets. Inflation has been peaking in the EU at 10%, in the US around 8-9%. But when you look at the frontier markets as well, the latest inflation reading here, you can also see it on the blue side of the chart. You have majority of inflation figures coming in below 5% already, and 80% of the markets, and we can be very selective about these markets. Of course, there is nothing keeping investors from not investing in any specific market or investing. I think 80-90% of the markets that we are talking about, they are seeing in single-digit inflations. So you have that aspect. You have real rates now forming up because central banks have been hiking policy rates. So that's a good environment to see going forward when the rate cuts are coming, not only from Fed side, but also from local central bank side. But in relation to that, if we think about currencies, if you look at the moments over the last 3 years, you see that some of the currencies have been taking a big hit. Pakistan currency was depreciating by 40%. Nigeria started depreciating its currency. Kenya has been seeing weak currency, but all these vulnerabilities I think that have been waiting for many years and brewing for many years. They have been taking place back in 2021 and 2022, along with the steepest part of Fed rate hikes. Starting from this year, we have seen currencies stabilizing. And when you look at this table, it probably sounds and looks a little bit complicated. But when you really think about the currencies in majority of frontier markets, these are mostly balanced economies, pegged currencies, and/or currencies that are following, hard currencies. For instance, in the case of Slovenia, you have euro. In the case of Vietnam, you have a balanced economy. You are not seeing significant depreciation. In the case of Romania, for instance, you have EU anchor because the currency is closely following euro. So if you make a quick list of that, if you take an evaluation from a fundamental perspective, 90% of the currencies, and this is including, of course, Middle East, which is pegged to the USD, GCC I'm talking about, 90% of our, for instance, current investments, they are in relatively resilient currencies. And we have seen this playing out over the last 1 year. This situation we expect to continue over the next few years as well. And even vulnerable currencies, which account for about 90% of its capital strategy, some of these currencies will be stabilizing going forward because economic rebalancing has been starting in many of these economies after significant currency depreciations.
Yeah, and yes, I mean one area which I know that is very close to you physically, but also that you like investing in is Middle East, and there you have stable currencies. So do you want to talk a bit more on that area as well?
Yeah, Middle East is a very good example of perceptions versus the reality on the ground. If I would tell you that majority of markets are significantly up since the war started, that probably sounds counterintuitive. But if you look at the performance of these markets, even after the war, we have seen Israel, which is a developed market, it's not a frontier market, but it's interesting to see that Israel is up by 5% since the war started. Some of these markets were hit initially, but along with emerging markets overall, we have seen the likes of Kuwait, Saudi, even Egypt going significantly up. Dubai is the only large market which is down since the war. But think about it, Dubai was one of the best in the world with 25% returns in US dollar terms, and it's only weakening a little bit and becoming more in line with still the strongest markets of 2023. So what I'm trying to say is that when you look at the headlines, you might have a different perception, but the reality on the ground is different. And I think if you follow the developments after the war, I think now the Middle East is building its own track record of approaching this kind of crisis in a different way. We haven't seen significant escalation. When you think about that, Saudi Arabia, for instance, one of the regional powers, they mind their own business, so to say. They have big projects coming up. They have these mega projects by 2030. They have Expo 2030, World Cup coming up in 2034. So they are very much focused on these big projects. And the same goes for the UAE. The World Bank, for instance, yesterday was saying that UAE should be growing by 3.8% in 2024. So I think their agenda is also busy with growth going forward. And one more aspect before me forgetting about that is that oil price is also an interesting dynamic in the region. Whenever you have these kind of tensions, oil price is acting very as a balancing factor because oil price typically goes up and provides additional support to the markets, of course, for the wrong reasons, but there is that kind of a balancing act. So I think this chart tells it all about headline investing and investing with the reality on the ground. I'm more on the positive side because Middle East is going through significant changes, and that's being reflected on the stock markets as well.
No, it's an impressive chart, definitely, and I guess most people are not really aware about this situation, especially if you follow the headlines and all the things that come on the TV, radio, and different channels which you're following. But your universe is not only about Middle East, it's also about Asia, and I know you have some views on some markets there as well.
Vietnam and the Philippines, these are among the most promising markets, I would think, for the next decade, probably. You have populations of 100 to 110 million people, young populations, and these economies are growing at 6 to 7% a year. The world, according to World Bank, is to grow by 2.4%, and that will be the slowest in 30 years. So you have young populations and fast growth in these markets. You would think that their stock markets have been strong, but for different reasons, their stock markets haven't been that strong. It's been mostly about stock picking for investors like East Capital. But when you look at the stock markets, we have seen both markets derating significantly. In Vietnam, for some uncertainties on the real estate sector and banking, And as for the Philippines, we have seen significant decline in liquidity and foreign interest. But think about that. You have two markets which should be growing by 6 to 7% in the next 5 years. Their equity markets have been derating from 17, 16 times to 10 times pretty much. And these markets will at some point be turning. And we are seeing some early signs of a turnaround, especially in the Philippines nowadays. So it really pays off to focus on individual markets and the main drivers of performance. And with that, maybe I also want to talk a little bit about the last point, at least from my side, in terms of performance. This is not to say that it's been great performance, everything is fine. But the point here is that both emerging and frontier markets at different cycles, they've been performing. EMs have been overshadowed by China, as we talked about. But when you look at East Capital Frontier Market strategy, it's been delivering significantly better returns compared to both emerging and frontier markets. And these significantly better returns have been coming along with the significantly lower standard deviations due to lower correlations. That gives us a very good Sharpe ratio. But the point is that with country allocation decisions and stock selection decisions, we can pick the best opportunities in this very broad set. And these opportunities don't have to be very highly correlated to what's happening on the global scene. So these are very individual idiosyncratic stories that we can address. We can pick the countries if we think they will be performing well, or we can pick the companies that we invest in. And typically, majority of the performance comes from stock selection in these good economies.
So true. It is definitely interesting places to be investing in. We have time for a couple of questions if there are some around. So just please post us if you wish. Otherwise, I was going to just ask you, Emre, as well, to maybe sum up a bit on the outlook for 2024. A bit, is it something else? I mean, one area we touched a bit upon was Eastern Europe, but I think it kind of stands out as a good investment case, not only because of our history, but also about the fundamentals at the moment. Do you want to expand a bit on that side?
Yes, let's not forget about Eastern Europe, of course. Eastern Europe was one of the best regions for, actually it was the best region, and I'm including here Greece and Poland as well. In 22, again, talking about headlines, we had a war in February, unfortunately, and it was pushing many of these markets down. But 23 was a recovery year. Most of these markets were recovering strongly. In Poland, I think performance was 50%. Romania, very strong. Slovenia and the rest of Eastern Europe, including Kazakhstan, we have seen very strong performance. And we see no reason why this performance shouldn't continue, because when you look at the valuations, maybe Eastern Europe isn't the fastest growing region of all, but we can find different reasons to invest. We talked about Vietnam and the Philippines, fast growing machines, companies growing by 20% their earnings. When you look at Eastern Europe, you most likely see mid to high single digit type of growth, but then you're talking about 5, 6, 7 times PE with 7-8% dividend yield. So you have really strong base. And for us, when you think about the dynamics, I think the risk reward profile is the most important aspect to consider. We look for downside protection in investments that comes along with valuation, and the upside should be coming with earnings growth, dividend yield, and valuations re-rating. And these markets are now in a position, especially in Eastern Europe, maybe more on the valuation side, but on Asia and Middle East, you have big profit growth coming in for the next 3 to 5 years. All for different reasons. We need to be very picky on the ground and really trying to understand individual drivers of these markets.
Thank you. And then to everyone who's been listening to this, thanks a lot as well. There will be more Outlook seminars and webinars coming your way in different formats the coming weeks. But this was the first one out, and please follow us for the coming months as well. Thanks a lot, everyone. Bye-bye.